Oh, GDP came out way lower than expected. That's not good. We might actually see some bearish action here. But the advanced GDP index on an annualized basis hasn't really changed. It's up a little bit. That's interesting. Very interesting. Okay, welcome back, everyone. If you're watching this at home, GDP just released. We definitely missed expectations. The forecast was at 2.5% GDP growth for the previous quarter, but instead we missed by a huge margin, 1.6%. Now, the advanced GDP price index, which is an annualized measure of that quarterly GDP, or that annual GDP, is a 3.1%. So still moving up overall. But that's not a good print at all. We actually could see some continued bearish pressure for the next week or so just off of this news until, of course, the Fed meeting on the 1st. Okay, let's get over here. All right, so here's the low of Asia. And if you guys notice here, this is for members specifically, this is the first fake down. So it goes fake down, fake up. And if we're unable to break this previous high, then this thing is going to go down. So right now the expectation is this, and then this is the real trade that I'll be looking for. Anybody have questions? We're going to go through the full GDP report here in a bit, but let me know if this is clear so far. We're rejecting the 88.6 right now of this previous low. So if this thing rejects back up and closes above 17,326, so shoots back up, closes above 326, I'll look for the next retest and enter that dip for longs. If this thing continues to break the lows, then it's according to plan. We wait for that 200 region, and then we buy it from that 17,200 region down here. It was very straightforward. Christine sent a markup. All right. Christine, this is good, but don't ignore the higher time frames either. So like the model here is cool, but it's all about context. If we know there's an 88.6 zone sitting way below, then just because there's like a 30-minute or 15-minute support getting formed, that's not enough. If there's a better zone right below it, it's probably going to go there first. So that's a big deal. If you're trading only smaller time frame structure, then you might take this buy because it's technically at the 88.6 and it's hitting all the metrics. That's why we have the type 1, type 2, and type 3. And if you haven't studied those 3 types, I'd make sure to do that before anything else because type 3s are common. All right. Let me know if you guys have any questions, comments, concerns. Put those in the chat. Leave a like if you guys are watching this on YouTube. And of course, quick reminder before we get this show on the road, May 1st is the official start date for the next NAS100 Masterclass. If you haven't already secured your seats, make sure to do so. And yesterday we were supposed to have that free webinar every Wednesday. Didn't get the logistics done in time. So let's move the free webinar to today. How about that? As said yesterday, if you guys head over to the website and just drop your email here to subscribe to the newsletter, we're sending out all updates on how to register for the free NAS100 webinar. So head over to Chart Addicts FX, go to the bottom, leave your email to subscribe to the newsletter, and you'll get all the updates on how to join the class and how to get to that free webinar tonight. Okay, back to the regularly scheduled programming. GDP report came out this morning. Huge miss according to the expectations. We had an expectation of 2.5% growth in the overall production in the economy last quarter. The expectation got missed by almost a whole percentage point, so came out at 1.6%. We're going to look through the GDP report here in a second to see where the biggest losses were and try to see if that's an indication of a market recession or if it's just one data point, nothing to over focus on. So we'll take a look at that. Because of the negative impact of that GDP report, we could see some continued bearish action going into next week. So I'm going to be more cautious. I'm on a 3-trade losing streak, buying in a seller's market. And had I taken profits on the first 2 trades and really just secured more of my position, they would have been profitable opportunities. So what I'm doing now is being more cautious, and not cautious in the sense of like, how do I say this? There's a difference between hesitating because you're on a losing streak and then being more mindful to see if the market is in a bear trend or bull trend. Because for me, the lower that the market gets, especially if we look at the higher time frames, the lower the market gets, the better the buying opportunity is, in my opinion. And so while a lot of people are looking at the lower highs, very valid, I'm looking at the fact that we have this structural low. The market had a very, very aggressive expansion. This is since the beginning of the year, January 1st. So since January 1st, we've been on a consistent bull trend. And then about a month ago, 2 weeks ago here in April, we started to have this retracement. And the retracement could go as far down as this low. And so I acknowledge that there could be a second leg of this move. Little, tips and tricks. Markets typically move in twos. And so there could be a second leg of this move before we continue. But because we've already broken so many of these structural levels here, all right, and then we ended up breaking back above that support, and then now we could be forming a new higher floor. If we form that double bottom or that new higher floor, that's going to be the perfect entry zone for the shift to really just catch the bottom of the market and then milk it on the way up. And so I'm looking for this opportunity here. Now, if the market breaks that support, then we could head as low as 16,300 before we continue up. So on the higher time frames, I'm mindful of both of those scenarios. So when I go down to the smaller time frame and I'm looking at just this area here, all right, members, if you've taken the masterclass, boxes. I'm looking at the box. I'm waiting for the market to make it down to a discounted price, and I'm looking to buy as close to the bottom as possible. Cool. Put a 1 in the chat if this is straightforward. Put a 2 in the chat if you're completely lost. Put a 3 in the chat if you just ended up here by accident and you thought this was a cooking stream and it's not. You said chart addicts. You thought it was damn, I was going to make drug jokes, but I don't even think those are funny. I don't know, y'all. Wait for the caffeine to kick in. All right, good morning. Good morning to everybody, or afternoon, or good evening, depending on where you guys are tuning in from. And matter of fact, just to make my life easier, let me know in the YouTube comments where you guys are tuning in from. Thabo, what's up? Simple Trader, David Howard. David, what's good, bro? Good morning, Felix, AB Mike. Sfilili? Brother, is that Arabic or Swahili? I don't know. If I can't pronounce the name, uh, yeah, I'm gonna just take it as disrespect, right? Because you put me on the spot, and now I look stupid, right? It's not cool. Let's parse through the GDP report real quick. Oh yeah, so live class link is in the description. Don't miss out. Put that one to the side. Advanced GDP report, we're gonna go through, and then let's take a quick look at the other pairs just so we have this idea of what's happening. All right, DXY still sitting. Super secret magnet indicator, can't find it anywhere else. Undefeated, undisputed. Not only is it a great target, 105.7, but guess what? 105.7 being used as support? Now that's crazy. Is there a chance that we see a retracement? I believe we can. We've seen this very aggressive bullish move for, I don't know, since November of last year. And so we could be due for a correction, but in my honest opinion, I want to see one more push to the upside first. The only reason that, I'm kind of betting on the possibility of this being a big retracement is if we look at, I told you guys markets move in twos, right? There's a little, hopefully that one didn't go over your head. But if I take this previous move right here and I project it out to this previous low, we've basically already made a similar size move. Okay, and so if we're going to keep projecting this out, we take this correction from top to bottom. And this is what we can expect for the DXY. Okay, makes a lot of sense. Brings us right back down to the second magnet range, that 103.7 area. And then we could potentially continue up, depending on the economic situation. And so I'm still, like, as long as price is holding support here, we can still see continued bullish action. But if for some reason we do see a big break at the market open today, this is what I would be expecting out of the DXY. Cool? All right. All right, gold back in profits. Still holding below that, like we're still using this entire zone as resistance, which is not a good sign. But I'm gonna take a gamble here. You guys remember the zone that we set up here at 2305? So the market broke back above support and then came back to that 2305 for a beautiful retest. And now we're breaking back above support. I think it's time the magnet indicator finds its way onto the screens. I'll have to stop sharing for a second while I pull up this indicator. You guys know we can't just drop this. We can't just drop it on them like that. We can't just drop the secrets on them like that. That'd be crazy, right? Super secret magnet indicator, undefeated, undisputed, heavyweight champion of the Forex division. There it is. All right, good stuff. Can everybody mute their microphones, please? Okay, we'll see how that opens up. Where's SkyFX? Guy, remember yesterday I said I'm gonna have to make a whole public apology if US30 does crash. I'm here to make that public apology. All right, where are you at, SkyFX? SkyFX, I was wrong, right? Whoever's got their mic unmuted, but I'm gonna ask one more time before I kick you off the stream. All right. See, this is why. And now I lost my train of thought. Oh, SkyFX, I'm doing a public apology. SkyFX, I was wrong. You were right. All right, good call. Market's crashing. I hope you're raking it in. All right, I owe you a drink or something. Fuck, I'm gonna have to owe you a seat to the masterclass, something. All right. Frenchie said, I still can't believe my bro hit me up for the magnet indicator. I can believe it, but a super secret, bro. Undefeated, undisputed. You wouldn't hit up your friend for it. Like, your friend's got some sense, is all I can tell. Your friend's got enough sense to ask you. US30, wow. I did not expect this, but 37,700, that's the entry price that I'm watching for US30. A little bit closer to 685, so about 25 points below that psych level. That's where we could be heading to. This has been a crazy day, y'all. It's been a crazy day. All right, we're already seeing that dip back down on Bitcoin. That's to be expected with all the recession talk that we've been seeing. People are not going to hold a lot of crypto, or maybe there's just some big sellers taking profits, waiting for liquidity to get into the market. A bunch of people start selling, and then they can execute these big buy orders. Yesterday's trade ended up playing out, but we had a very early entry, or I had an early entry, paid the price for it. Not happy about how this trade went. I'll end up reviewing this later this week once the market closes. But yeah, not too happy with my execution there. It's because I showed up late. I showed up rushed, and I just kind of went for the easiest, kind of like the easiest thing, but missed the obvious, right? Structural zones were here. This was the perfect entry, not up here. And so it was sloppy. Yesterday, very sloppy performance. Today, I'm locked in. I have my higher time frame zones set from the night before. Woke up before the market opened and saw all the zones that I was watching for. And instead of buying it at the GDP news, I had enough sense to wait for the higher time frame zone to get hit. So, and then hopefully I have enough sense to wait and be patient and not execute this buy prematurely. All right. This is your reminder as traders that risk management is a top priority. It's not a luxury. It's not an inconvenience. It's not something that someone mentioned to you in a course. Risk management is the entire game. If you play the numbers right, if you're risking a small amount of money to make double or triple whatever you're risking, you don't have to win that much to be profitable. If you're over leveraging, it's going to eat away at your profits and you're constantly going to be in that break even stage or negative. So this is your daily reminder that over leveraging has not worked. Being inconsistent with your risk has not worked so far. That one trade that you keep trying to chase, like the high of that one trade that worked out because you over leveraged and you keep trying to chase that high, yeah, that dream is gone. All right, it's done. It's over. Let it go. Proper risk is the only way. Hasn't been working so far. If you're gambling or if you're over risking on one trade that eats up all your profits, this is a sign. Okay. On any given day, you can make the change necessary to change your life. It's a choice, people. It says, Josh, that was you? You switching devices. He said Arabic, mate. Okay, the bathroom at work. Jose and Celeste, I don't know which one's typing. I feel that. That's why I had to quit my job back in the day. Sabah wa sharbin, sabah al khair. Good to see you guys. West Virginia, bro. Yeah. Yeah. I don't, that's above my pay grade, brother. Only thing I know about West Virginia is that song. Do you only focus on long entries? In a bullish market, I do, yes. And so this is the cue the part where everyone's like, but Roy, it's not a bullish market because we've had count the days. Because we've had 2 weeks of bearish price action. It's no longer a bullish market. And to where I would zoom out and say higher lows, higher highs. Okay, now are we in a retracement? For sure. How deep can this retracement go? God knows. Iran's attacking Israel. Anything's on the table. It's an election year. But they released Epstein's list, and we had the Diddy allegations, and companies crashed left and right. And it's only the fifth month of the year. This election year is going to get so much crazier. So could there be some serious news that comes out and we just continue to be in this retracement cycle? I believe so. I believe so. But until then, I'm looking at the overall trend. I'm seeing that the trend is bullish and that even though we have these sustained periods of correction, even buying the dips in these corrections is what I would prefer to do. So some people want to short during these correction times. I'm just looking at these dips. Okay, I'll try my luck. Okay, this wasn't the full recovery yet. Try my luck. Try my luck. And then eventually you have that real continuation. So maybe this isn't the real move. Maybe we get this correction for the lower high and then we go down. I'll try again. And then I'll try again before the last move. Does that make sense? And I would much rather go long in a bullish market than try to guess the shorts and then try to time it perfectly to guess when the market's going to turn around. Because if you think that you have that level of prediction to know when is the shift in the market every time and which one is you're going to catch the perfect high and how many waves it's going to be, whether it's going to be a 3-wave correction or a 5-wave correction. If you think that you have that level of prediction and you can outsmart the market, market will humble you. So I would prefer that you just don't let the market do that and just be smarter. But if you need to touch your hand on the stove, so be it. I'm here for it, right? I'll be right there with a nice cold towel for you as soon as you finish. I'm just like, here you go, man. Told you not to fucking touch it, but you have to fucking touch it. Now we're here. All right, reminders for traders. Have a trading plan. Make sure you're managing your risk. Make sure that you predetermine your entries. Trade your plan and plan your trades. So if you haven't already planned out a trade idea and rationalized to yourself why you're going to take that trade, then do not execute a buy or a sell. If you haven't sat down before you even executed and said, here's why I'm taking this trade. And matter of fact, take it a step further. Ask yourself this very important question at the end, right before you press the button. If I was to lose this trade, would I be okay with it? Would I be able to justify this trade to myself later? And if the answer is no, because you're taking some random trade that you're not really sure about, then don't take it. Got it? Put a 1 in the chat if we got it. Let me see some confirmations here. This is not just words. This is very important because half the people or more on this live stream are going to find some way to fuck it up. They're going to find some way to, even if we win the trade, some way to lose money. And so just by following those simple reminders, you can keep yourself out of trouble and ensure that you are focused, making the right decisions. Okay, good. Kelvin, I hope that answered your question. Higher time frame is still bullish, even though we're in a retracement cycle. The lower we get in that retracement wave, the more likely we are to hit the bottom. And so people get frustrated as they continue to go long in a bearish market, and then eventually they do something called capitulate. Capitulation is just another word for they give up. And as soon as the buyers capitulate, that's typically when the market's going to turn around. And so there's a very, very big saying for traders, and this one changed my trading game, is your capitulation is someone else's entry. Okay, so then the next lesson for me became don't burn all your money trying to, catch the perfect entry for the lows. Instead, have a very specific risk management approach that you're, on the way down as I'm buying. I really lost those 3 trades that I've lost were all tester entries. And so they were all about 0.25% or a quarter of my overall risk that I put on a trade. And so I'm not trying to guess the reversal of the market and try to get this big continuation and over leveraging doing it. The whole point of catching the bottom and being precise is that you don't need to over leverage to make money. Now, if I start to over leverage here and I just keep losing trade after trade, even when I win the last trade, and even if I catch the swing trade, I'm not going to break even. I'm still going to be at a loss, right? So take it from me. Been through way too many of these cycles, been through way too many corrections in the market. And if you're going to be on the buy side, that's the biggest advice I'd give is just don't burn your chips on the way down to where when you finally catch the trade, you're not even breaking even. And if you're going to be on the short side, understand that the lower the market gets, the more likely you are to hit a floor. And so reduce your risk as it goes lower and lower, and don't give back the profits you're making on the sell side. Right? So you can make money on both sides, but you have to have a very clearly outlined system to do so. Thank you everybody for the support, by the way. That Trading View podcast is starting to do numbers. Really happy about that. Happy to see you guys taking that on. A lot of great content coming out. A lot of incredible content coming out from our camp. We have a lot of new Peter videos dropping. Of course, you guys can watch the full Trading View podcast directly on our channel, if I can find it. And by the way, thank you everybody for we blew through 50K subs. That was on Friday, I think. And then between Friday and today, in less than a week, we're already up at almost 5,200 subscribers. So shout out to all the new subscribers. If you're on, thank you guys for all the support. And thank you for everyone who's been here supporting us since the start. Couldn't do this without y'all. Straight up. So here's the Pierce podcast that's getting a lot of great feedback from this one. I think it was an awesome conversation. If you guys don't have time for the full podcast, you can watch it in chunks, or you guys can just watch these short vids, which basically break down different segments of the videos. Okay, and we'll be dropping these for all the podcasts we do. So make sure to hit that subscribe button to keep up with all the latest content, and check out those new interviews we're dropping, because they're all super fire. They might be high level for some, but I think that that's important. Even if you have to kind of pause it and maybe look some things up, I think it's really important information. All right, Frenchie asks, good morning, Roy. Do you know of any signs that might indicate a huge recession? When I say signs, I mean anything that we could see in real time, like price of goods increase. I'm noticing more and more that my dollars don't have the same buying power they used to. Like my bread been eating the past 24 years is damn near doubling in price. Anything like that or other than that? French, good question. I would say, I wouldn't say. The reality is a lot of the issues that I'm seeing are not short time frame problems. These are problems that are going to hit us in 5 years, 10 years, and 20 years. And they are big, big problems. This is the kind of like the nature of the conversation I just had with Bob Elliott, because his whole thing, he's an optimist. And so I was doomsday guy, and I'm always like a recession hunter. That's where my eyes and my perspective was set to just looking for the next recession, the next big crash. And every time I talk to Bob, he reminds me the monthly data points are not important. Even the quarterly data points are important, but then you look at things year over year. That's how macroeconomists look at the world. And he said that the labor market is still strong. People still got a job. Purchasing power, we'll talk about that here in a second. Obviously, our money is getting destroyed, and holding cash is a recipe for being broke. Okay, because you're going to lose purchasing power. But we look at the key metrics. Everything up until today's GDP print was still looking good. We still had positive employment numbers. Everyone had a job. Consumer spending and consumer sentiment was good. Even Tesla released their earnings call, and they were saying that their input costs had dropped. Even that's why they're trying to release. They kind of had this plan to go from 2.3 million units to 3 million units in production annually, because I feel like they kind of have it in their cards now, because those input costs are starting to go down. So in certain places, the supply chain shocks that we saw post-COVID are starting to work themselves out. There's obviously still consumer inflation, but I don't think that that's from the supply side. I think that the consumer inflation, the price at the stores, is due to the amount of money that was printed. Plain and simple. 30% of all the money in circulation was introduced in the last 3 years. That's a lot of fucking money sloshing around. Everything is going to get more expensive. We're all playing Monopoly. And instead of one person getting a lot of money, everybody gets 10 times as much money as they currently have. Okay, so the rich person who has a lot of bread on the table, they're making 10 times more. So now they're 10 times as ahead as they were before, way further ahead than they were before. Now everybody else gets 10 times more, but now the houses are 10 times as expensive, and everything's 10 times as expensive on the board. And so the rich got richer during COVID, because if you own assets, you really got rich. And if you're holding cash, then you just lost your purchasing power. So hold assets. That's the biggest lesson for the next 5 to 20 years. If you want to hold cash and you want to save, you're going to get screwed out of your life. Everyone's like, well, I don't want to invest or spend because I'm going to get taxed. So instead, I'll just hold the money. So, I mean, you can look at it. What is your return after taxes, after inflation, for investing the money? And then what's your cost for holding the money in a bank and losing purchasing power every year for the next 10? And whichever number is higher, that's what you do. And investing is obviously going to be the higher number. Right? I don't think we're going to get buys today, y'all. I think this is a little bit premature. If anything, the buy opportunity is going to be down here at 1765. So it might be worth waiting for that instead. All right, I'm going to take both opportunities. At the market open, I'll see if we can get like a pullback, push down to this zone. We buy it, take profits, and then the rest we'll just leave it up to the market. Someone said, yes, thank you. Do you look at seasonality tendencies? I heard somewhere these months, April, May, June, tend to be quite bearish. Typically, yes, they are. There's so many reasons why large companies sell off their stock. Number one is tax season. Like you got a $500 million tax bill. You don't have the cash. You got to come up with the cash. You sell some stock, come up with the liquidity, or go pledge the stock as collateral to a bank or something, which doesn't look good to shareholders, which leads to a sell-off. So there's a seasonality effect. But here's another seasonality effect as consumer spending typically picks up in these seasons. So first you have the spring break rush, then you have the spring sort of like the initial push around like April and May, and then June is really when we start to see a huge uptick in spending. Later in the summers, things start to slow down, and then late August we have that before the school year sort of spending. You see the earnings reports for all the back to school stuff, whether it's the clothing stores, department stores, big retail stores like Walmart, back to school gear and everything else. So seasonality definitely a big deal. I watch for holiday seasons. That's a big sort of like tell. If on an annual basis, you look back at last year, how much people were spending for Christmas and how much people were spending at St. Patrick's Day and these other holidays, spring break and the rest. And there's a significant drop off. That's what I look for. Now, if there's a significant increase, but the economic situation is shaky, that's another tell. So typically that's a sign that credit usage has started to increase, because if the economic situation is shaky, but spending is higher than it was last year, then you can tell that people are taking out more credit. And if people are taking out more credit at these high rates, then we can expect in the next 6 to 12 months, a lot of defaults start to happen. So I do look at seasonality and try to project ahead, but for the day to day, I try not to allow the fundamental picture to cloud my judgment. Instead, what I do is I use fundamentals. I use seasonality to look for where we are in the cycle. The reason for that is to look for macro kind of direction. I want to find the higher time frame direction for the next 3 to 6 months. Once I find that direction, I use a day trading strategy to execute orders in that higher time frame range. And then I use, data points like today, not as a signal of what the market's going to do because of the data point, but because of the reaction to the data point. Okay, if we get something that's negative, you're going to see panic selling. It's inevitable. Does that mean the market's bearish because of the news event? No. Did the news event provide a cover for sellers to execute big orders? Yes, because buyers are going to step out of the way, or there's dumb buyers are going to load in, and the smart buyers are not going to pump price up. So there's liquidity for the sellers to get in. That's why they use news events. And that's why we're not going to be liquidity today. We're going to be more patient than we were yesterday. All right, everybody clear? Frenchie, did I answer your question? And Kelvin, did I answer yours? Will said, I've never seen you short the market. We've been in a bull trend for a long time. You would have seen me short the market back in 2022 when we had the massive sell-off. Okay, why would I sell off right here? I wrote about this extensively on our website at the time, which is the central bank pivot. The central bank had been on a very specific path for 14 years, and they were about to finally shift. Oh, the Fed's dilemma. I like this. Nice. So January of 2022, the day the year started is when Jerome Powell hit the stage. So in 2021, Jerome Powell hits a stage and says that everything is fine. We don't need to get aggressive with our rate policy. Inflation's at 9%. I'm pretty sure inflation was at no, it was probably a little bit lower, probably around 6 or 7% going into 2022. They continued to print money like well into 2021 while inflation was climbing. And then Jerome Powell announced that they were going to start doing rate hikes in 2022. That pivot ended a 14-year party that we were having. And that ended up panicking markets. We ended up seeing a very healthy drop off, which is necessary. Then the Ukraine war happened right about here, which sort of exacerbated the sell-off. Once we sort of established that we're not going into World War III, that's when we started to see the recovery, and we've been on a swift recovery since, because the rest of the world is going to shit. The US stock market was resilient. The recovery was resilient here in the States. Been on a bullish market. So I don't short these. This is what I'm trying to tell you guys. I don't short these. These happen. These will happen. I'll short this market once we've established a new lower low. Everything else, I'm looking to buy, 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 buy it, buy it, buy it, buy it. You understand? It's not, I'm not a one-trick pony looking at, oh, I only buy on the buy side. Look at the higher time frame context, understand the directional bias that you're in on the higher time frames as well, and then use that to guide your judgment as to which direction you want to trade. And a lot of people flip-flop on directions. They'll be like, well, I saw 4 or 5 days or 2 weeks of bearish candles, so it has to keep dropping, right? Completely ignoring structure. So higher time frame versus lower time frame, higher time frame is always the priority. All right, we got Marksman Jay. What's up, bro? I haven't seen you on here in a while. SkyFX, I gave you a public apology. If you see this later, man, this guy. Okay. So I know what question a few of you guys in the VIP chat are asking. It's before market open, price about to hit entry. Do we enter now? Good question. Means you're thinking, right? I'm going to wait for the retest. So we might see this jump pre-market open. Okay. And then right at the market open, really, this trade might happen right at the market open because even if we're bearish, right, we'll see this big pump. And then an hour after the market open, we'll probably see a lower high and crash from around this region here. So we would have to buy around market open. All right, even though it's a bit riskier. If this is like a scalp kind of trade, we're gonna have to be that in and out, and we're gonna have to be outside of that normal trading session. Because if we wait till 10:30 or an hour after open, the market will likely be here, and that's where it'll start selling off instead. And so while we're waiting for the pullback right here, the trade might be done. Making sense? Now, I'll say safer. I don't like to use the word safe with trading. The more conservative approach to take, huh? You guys like that? The more conservative approach to take here would be a bounce. And then instead of buying it, you just wait and then look for the correction. And if you don't get the correction, if it starts to break down like it did yesterday, you don't enter. You can save yourself the hassle of getting into a trade prematurely. And then you can just buy from the 1765 region, which I think is going to be the bounce for today. But I think this first one's going to be scalp. The second one's going to be big swing opportunity. So, yeah, we could potentially catch the scalp on the stream and call it a day. Those articles are heat, Roy. I've read every single one. The gems dropped are crazy, and it's free. Come on now. My guy, bro. I appreciate the support. For real. Yeah, to go back through that example of the higher time frame, smaller time frame, kind of big picture on NASDAQ. Opposing viewpoints. So the Fed pivot. So the recession. So the economists are anticipating a Fed pivot are under the assumption that current policy will lead to a recession, meaning that if we keep rates low, it was going to lead to a recession, which makes no sense. The recession will lead to a weakening of employment conditions, which is going to signal the Fed to change course, potentially reverting back to QE. This is what I think is going to happen eventually this year. Okay, so pressure caused by high unemployment. So if the Fed continues to tighten and we don't have any rate cuts this year, the pressure caused by unemployment, which is going to happen, will be a big burden for the Fed, and it's going to cause them to go back to QE, which is money printing. So basically, they're going to get scared because everyone's losing their jobs. They're going to start printing money again. That's kind of where I was, or that's where the crowd was going into 2023. Then there was these are the two opposing positions, which is the Fed pivot. People are waiting for a rate cut at some point, and there's the higher for longer, the tighter for longer. Jerome Powell indicated in his last meeting that they're going to keep interest rates high until they hit that 2% inflation target. Regardless of how bad the economy gets, the Fed has to continue tightening in order to save their credibility. And I agree. Now, this article was written October 2022. It's called The Fed's Dilemma, meaning they're stuck between two very hard choices. And it's only gotten worse for them. So the data that I set to watch back in 2022 was obviously unemployment, the inflation report, CPI and PCE. And CPI has just gotten worse and worse because they keep changing and moving the goalpost. Sales and sentiment. So are consumers still spending? Very big deal. And then GDP. So today we had that GDP print, did not come out good. That's something that I'm watching as a data point. So the conclusion is if the Fed is too soft on tackling inflation, then it will persist into 2023 and cause a larger shock to the economy, which is exactly what happened, as I just showed you all in 2023. Well, really, 2023 was the recovery here. So 2023 was a market recovery, but the economy was still dealing with with the inflation issues. Back in early January, we were still having eggs. Do you remember the egg crisis? And then the biggest question that was on the table was gas. So we were able to bring inflation down meaningfully because Biden basically dipped into the strategic petroleum reserves, our stockpile for emergencies of oil, and dumped it onto the market to reduce gas prices temporarily to help the Democrats get elected in the midterm and primary elections, or really, it was the midterm elections at the time. So that brought down inflation meaningfully. It allowed a lot more. So the supply chain shocks were caused by number one, geopolitical instability. China blockades, Red Sea. The Houthis were sending rockets left and right. They had to find shipping companies had to find new lanes, but under Africa to get to Europe and to get to this, to the rest of the world, which made inflation in Europe much more expensive, which sort of had a trickle effect. There was so many of these supply chain issues that were caused. Now that those supply chain issues had slowed down, inflation finally started to come down a bit. The gas prices coming down also helped transportation costs drop, which eventually caused inflation to drop as well. So Biden's plan to dump oil on the market to reduce transportation costs, to reduce overall stress on households, I think worked out in the short term, but didn't have a meaningful long-term effect on the rest of the consumer prices. Take diapers, toothpaste, and all the rest. Those prices are still high. I use haircuts as an example, but that's the one that's like sticky inflation that just doesn't go away. Okay, so inflation is still hot. That's where we were going into 2023. We believe the Fed has another 5 to 8 months of tightening before the economic conditions worsen to the point of intervention. A deep recession is almost certain going into 2023. So this is where I was wrong. Now, I wasn't wrong because we did have, I believe it was 3 consecutive quarters of negative GDP growth, but the Fed and the Treasury conveniently changed the definition of a recession. Do you guys remember that? Do you guys remember when the Fed just basically, or the Treasury came out and they were like, yeah, we're not using the 2 consecutive quarters of negative GDP decline as the measure for a recession anymore. And we're all just like, what the hell are you talking about? How are you gonna change the definition halfway through a crisis? What does that even mean? So that's the Fed's dilemma. They're stuck between a rock and a hard place. That's the July meeting. Then they have the 2023 predictions, which I really wanted to go through. All right, we had a 2023 outlook. I'll show you guys the 2023 outlook as well as the 24, and then of course at the end we're going to go through the actual GDP report itself just to see where most of the gains and losses are. 2022 in a nutshell. So central banks ended their 14-year era of QE. They're selling assets off their balance sheet, which they barely did. They were selling $100 billion a month. But if you think about that, they put in like $9 trillion. If you took out 100 billion a month, that's only 1.2 trillion a year. So it would take you like 12 years to undo the amount of money printing that you did. And then as soon as the banks got in trouble, they ended up bailing them out. And then they ended up introducing a ton more liquidity into the market. So they undid all of that. So global economies experience GDP growth. Things are good. Inflation. So year-on-year inflation globally was at 10.7%, which is horrendous. Okay, US dynamics. Where were we at? GDP was at contracted by 1.6%. So going into 2023, right before the big bull run, GDP was actually at negative 1.6%. So the economy was shrinking at 1.6. Today we were growing at 1.6. It's not good, but it's not negative. And then it was followed by a smaller decline of 0.6% in the second quarter. And then we had a slight increase going into the end of the year, which likely led to that bullish run. There was trends to watch. So this is basically the whole story of 2023. This was spot on. The Fed's hiking cycle. So they continued to raise interest rates until 5.5%. And then we chilled out at 5.5% going into 2024. Consumer spending was a big one. Credit card balances. This is the one I had my eye on. We saw a lot of defaults late in 2023 relating to credit cards and used cars on the lower end of the market. Tons of delinquencies in loans. We also saw big delinquencies in or defaults in those buy now, pay later firms like Klarna and Affirm, where you can split up your payment in between 4 or 5 different payment. There was a lot of defaults there, clearly because they were doing soft credit checks, and the credit worthiness of the borrowers was definitely a question. All right. We're 9 minutes out from market open. Price is right at that first entry zone. So I'm not in this trade yet. I'd much rather wait until after the market open spike. And then, of course, 1765 is my second buy option. I have to adjust the zone here. All right, so for the first trade, really, this is my structural area that I'm looking at as the local support. So we have that local low, and then we have this high right here. I'm looking for correction of this overall move. We could break through clearly because the market's been pretty heavily bearish with this momentum. So we could break through first before we bounce, but the stop loss doesn't really need to be much lower than this. We could probably get away with slightly less than 100 points. I gave it some room just in case we do come down here, broker, spread, etc. And then the second option would be if the market breaks right through all these zones, then we can buy it up at 1765. God, I want to buy this thing so bad. This is patience, man. This is patience and discipline. Discipline says that I have a very clearly defined strategy. I don't trade before market open. And so even if I miss the trade, I'm not going to chase it. If it's not in my session, if it's not following my rules, then I don't have to be in the trade. So discipline over chasing the market. If you guys haven't checked out our recent interviews with our successful students, make sure you check that out. We have a ton on the channel already, and we just dropped this recent one with our guy Jensen, how he turned $600 to 9,000, more than 9,000 at this point. Then got funded, crushing it, and now already requested his payout from the futures firms. Check out this interview. Definitely one of my favorites on the channel. Along with all these other ones, we got our guy Josh here. We have Mike Pineda. We got who we have? We have Lessman. We have Jacob. I think we're missing Bryce. Bryce, I'm sorry, brother. We gotta fix that up. We got Justin, Chris, if you're on here, Big Bobby, if you're watching this, my guy. Yeah, we got so many. Let's go. Of course, my guy Ryan. Oh, and Lorenzo. Oh, come on now. Uh, Old podcast. I'll just do a quick shout out here for the old podcast. Oh, whoa, never mind. Let's get off that. Back on track. Labor, strong dollar, housing, Japanese dilemma. God, this was all spot on. We'll do the 2024 one instead. This is so tough. George said, hope to be there soon. George, looking forward to it. Christine said, where the ladies at? I'm gonna ask all the same question. Where are these payouts at, ladies? Whoa, what's going on? I'm gonna create some controversy in the chart addicts chat. So you guys, and you're gonna let a bunch of dusty guys basically beat you guys at fucking trading? That's what's happening? You're gonna let these guys just outpace you in a male dominated a bunch of dusty dudes? Come on now. You see what's actually funny is the guys in the chat can take that joke because I just called every single person that I just named, all really good friends, called every single last one of you guys dusty for a joke, so I can give some confidence to the women, create some controversy. That happened, right? And that's why a lot of those guys are successful because they have thick skin, because they don't let things get to them. They don't let their emotions be in control. That's real. But Christine, I'm looking forward to you being on here. Like, stay consistent. You're on track for sure. And so are a lot of the ladies in this chat. Like, I know, I mean, to be honest, a lot of these are long overdue. I'm looking in the chat right now. Where's Bianca at? That one's long overdue. Linda, our interview is long overdue. Long overdue. Sandra, can't wait to do ours too. Yeah, we got a lot coming up, Christine. Got a lot coming up. I'm getting pressed now. Roy, the 886 are working so good on gold. This is considering I just know about the 50% strategy. Just sold gold to the hell. Good stuff, AB Mike. He said yesterday's podcast was really good. To be honest, I agree. Will said, I know 1.6 is less than expected for GDP and it's slowing the economy, but still the economy is growing by 1.6. You're right. But keep in mind, when it comes to shorter time frame trades, it's not about the actual number. This impacts the higher time frame direction. Okay, it's about when you're looking at shorter time frame reactions to market data, you want to look at the forecast or the expectation versus the actual. Because economists, predicted this, traders and investment firms and banks, they all were sort of looking for this number, and then they got surprised. And now they have to do sort of this plan B kind of deal where they might sell off a bunch or buy up a bunch in a short amount of time. Now, what's really happening is that everyone already knows what they want to do. And then depending on how the news comes out, they'll execute their orders, whether it's buy or sell, based on whatever comes out. These banks and these large hedge funds and institutions and the algo funds, they all already have their plan set. And so they're just using this news event as a cover to put in big moves. Because if you move the market on a regular day, you're going to create way too much panic and you might have the wrong effect. But if you do it correctly, then you can entice a bunch of people to take the opposite side of your trade, and you can have enough liquidity to execute the opposite order. All right. 3 minutes till market open, and this thing looks like it's about to just reject and pop off. Tester entry, maybe. Let's look at the smaller time frame here to see if this trade even makes sense at this price. Because what I'm seeing is like if it's bearish, even if we come back up here, would we still make money? It's a 1-to-1 if we put a wide enough stop loss. All right, if we put a slightly tighter stop loss to account for the market open, it'd be about a 1.5-to-1. If it goes to the second TP, though, we'll get a 2.3-to-1. Interesting. I did a micro contract on NAS. Literally, as soon as the market opens, I'm going to give it a second because I think it's going to shoot down to this level, and I might be able to get a better entry from down here. So I'm going to give it a second to make that jump down real quick, maybe about 40 points or 30 points. Then I'll put in the first entry. I'm gonna have to do it on my phone first, and then I'll put up the paper trade for the visual. Quick question. You put me on to hella game with fundamental trading, but why don't you speak on earnings reports? Because when you're looking at indices, you don't have to look at individual company performance. You just have to look at sector performance. So the real question when I'm betting on NAS is not necessarily do I believe the 100 companies in the NASDAQ are going to perform well in this cycle. And it's not even do I believe the Magnificent Seven or the top 8 companies that really hold most of the weighting in the index. It's not even about whether they're going to be successful. What I try to look for is industry trends. Do I believe technology is going to be more successful in the future as an industry and as a sector of the stock market? Do I believe that technology will be more successful in the future or less? And my bet right now is that the technology sector is just getting started. We saw Nvidia hit over $1 trillion in market cap, and there's going to be a lot more Nvidias, as time goes on. So we're right at market open. Good morning, everyone, and welcome to the New York session. Waiting for this buy entry here. I just want to see price kind of make this shoot down. If it does not shoot down and it starts to kind of close back above this 17,240, then I'll take a buy entry here and scalp this at the market open. Now, keep in mind, this trade is likely to be a 1-to-1. Entering at a bit of a lower price. So here's what I want to show you guys. Here's kind of the range I'm playing at. This is what the scalp range would look like. So about 1.3 to 1 R. Okay. It was a 1-to-1, but as the market dips below the zone and we can get a better entry, the better entries will be below that support. But it's also a little bit more risky because when price breaks above that support zone, you have a higher confirmation. So the riskier entry is also the one that will give you the better R&R. See, as the market dips, now we're at 1.5 to 1. As it goes lower, now we're at 1.8 to 1. And then as it continues to go lower, it'll get to 2 to 1 R&R, which would be a much better opportunity for me. So let's see if we get a reaction here at the previous support. There we go. Whoa. Need that one to be there. All right, we're seeing a minor reaction already. And we're only 2 minutes post-market open, so I don't want to rush into this trade, right? So let's give it some time to see if it's going to break through. Not time, but let's give it a few, I'd say 1 or 2 more 15-minute candles, okay, to see if we just blow through the zone or if we get a rejection. Roy, I enjoy these sessions, and I'm extremely grateful for you spending your time with us. I have a little extra sauce to add to your text if you're interested. Let's hear it. To be honest, like my real answer is I'm good because my understanding of my strategy is very specific to the way I trade, but I'm also a forever student. So if you have something, I'll at least take a look and see if it's valid. Why not? This thing might just break through. Happy Thursday, Sandro. Good to see you on the streams. Good morning, everybody. Felix, good morning. He's from Indonesia. Rushi's in Canada. Awesome stuff. West Virginia, South Africa in it. Kenya. South Africa, Buffalo, New York, Australia, Germany. Oh, this is awesome, man. We got all over the world. Said the homie Mike was right about selling NAS yesterday. Yeah. I already did the public apology. Don't have to fucking rub it in. All right, you get one. You get one apology from me, and that's it. All right, tester entry is going in. So I'm only putting a small position. So 25% of my total risk. So if I'm going to risk $500, I'm only going to risk 250, 125. So $125 on this trade. So if $500 is what I'm willing to risk today to make money, and I'm risking only 125 of it, if I lose, I still have another 3 of these trades. Or I can put, another 125 on the first entry and another 250 on a second entry once the price gets down here. So there's different ways to play this game. And so tester entries, whenever you guys hear me say tester entry, it typically means a position that is significantly smaller than my full risk size. And it's typically 25%. Now, while I was explaining that, market's filling to the downside a bit. So good thing I didn't put in my tester entry yet. Still holding or still being patient, still holding off. Looking to get a real confirmation here. Looking to get a real confirmation, just showing that price is going to hold this zone. We saw a pretty good rejection, but then, now we're starting to get that fill. So, okay, rejection is still looking good. Rejection is looking good. We still have 25 minutes until the 30-minute candle closes. So I'm going to get on here to the 15-minute time frame because if we break back above that 220, I want to know sooner rather than later so we can execute an order in a timely fashion. I'm going to give this thing 10 minutes to close. If it closes bullish and it just kind of rips to the upside, then I'm going to wait for the retest candle of that support zone. But I do want to see like some kind of solid closure here because I'm still not convinced. Still not convinced. Just got to see a bit more from the market. Sky, I gave you the public apology. You missed it. All right. I said I might have to even give you a free seat to the class. I might have to, right? You were right, Sky. Okay. You were right and I was wrong. Are we cool? Said Roy, are you not worried about consumer sentiment? First off, I ain't worried about shit. You understand me? I ain't worried about nothing. Because God got me. Now, am I paying attention to consumer sentiment? Of course. However, what are consumer sentiments tomorrow? I thought I was tripping for a second. I was like, damn, I can't believe that's today. I thought it was tomorrow. Then I had to go check and I'm like, bro, this dude almost got me. So at the end of the day, like I'll still we'll be on the stream tomorrow and go through the consumer sentiment report. Same thing I said about GDP. GDP obviously a lot more important since they released this in 3 sections and it's dropped quarterly, which is a pretty big deal. Consumer sentiment, we look at month over month change. I'm not looking at the individual release as much as I'm looking at the overall change in consumer sentiment. The sentiment's been getting stronger and stronger month over month. People's confidence in their ability to spend is only getting higher. So consumer confidence is pretty high. And the expectation is that we're going to have another kind of smashing month here. So pretty good trend as far as we're concerned. Pretty solid trend here. Guys dropping periods in the chat. What are you on? Said it feels like Friday today. It does, doesn't it? It does, it does, it does. All right, CA members, did anybody already enter this or no? I'm still holding off. George said did a micro contract. Josh is in. George, Josh, Christina's in. Janae's in. Chris said no. I feel like it could tank. Yeah, fair enough. Trust your gut. Got buffer in my account. Doing 1-3. Oh, doing a third. Okay. So 30% of the over a third of the position size. Good stuff. Almost there. I'm giving it 5 minutes. What were you guys' takeaways from the podcast with Pierce? If you checked out the podcast with Pierce, what were some of you guys' takeaways? Just give me one takeaway or something that stood out to you. Chris said, worst case, I miss out. There it is. Better to miss a trade than to chase it anyways. Still waiting for the first 30 minutes. Roman, I'm proud of you, brother. That's what I love to see. And Roman, I'm looking forward to doing our podcast here soon. Stay consistent. I know you're crushing it. My man got on track and hasn't looked back. Oof, US30 coming in hot. Why the hell did I draw my zones like this? Yeah, to be honest, I like this entry a lot more. Damn. Why is that zone so big? Pause. Yeah, I'd say it's 37,685 was my first kind of initial entry idea, but it could go as low as 470, which is about 200 points lower before we get that bounce. Nice retracement coming in though. Nice retracement coming in. Like we still broke above all the previous highs. And so we established first, we had kind of had this liquidity grab through, and then we established a new high above both of these. And so we had a shift in market momentum where we were establishing lower lows and lower highs. And then we had this shift where now we're building higher highs and then higher lows. So even though we're in this correction, as long as we establish a higher floor than here, this is going to be the start of that, that shift in market momentum. Ooh, really nice rejection here. 2 minutes until the candle closes. Beautiful. My tester entry is going in on the retest. All right. I just had to enter the order on my phone real quick. I'm in for the tester entry. My TP1 is set at 17,330. TP2. All right, so the market could play around this area for about another half hour to 45 minutes right here. That's the patience of being a trader, is that you also have to have a realistic understanding of a realistic expectation of market movement depending on the session time and session volume. And so right after the market open, it's not going to be like sometimes it's a straight shot, but sometimes it'll take some, take a while at the entry, grab liquidity, make sure that there's more orders entered before it makes its move. So this thing could consolidate for a bit. If we do have a straight shot up, that would be very convenient. We can secure partial profits, protect the trade, and then look for a re-entry if it comes back for a retest. Okay, solid candle closure above that zone. But like I said, it's going to take a bit of time here. So we'll just be patient, let this thing play out. I'm gonna go grab a drink real quick, go grab some coffee. Let me know if you guys have any questions, put those in the chat. Chris Brown said 91 watching and 26 likes. Come on, y'all. Smash the like button. I like that. Rapid growth in amount of traders since COVID. About 40 million new traders since COVID. It's a lot of new traders. All right, I'll be back in just 1 second. Let me know if you have any questions. And obviously, when I get back, we'll review and see if this trade broke down or if, yeah, or if we're in profit. 1765 is this is plan B for me. This is gonna be my plan B if the market breaks down. So I do have enough ammo on the sidelines to re-enter if needed. Okay, just a heads up. This is my plan for the day. All right, I'm back. What happened? Nothing happened. Incredible. Minor break above the zone. Minor break, but no clear retest above the zone. You guys see that? No clear rejection. So we had a nice bullish break above. Couldn't, we're on the 5 minute here, so bear with me. But structure is structure. Could not break above this high. All right. And then could not sustain above this area of support. And so we need these candles to break back above that 17,240. And if it can't break above that 17,240, it's got more downside to go. So that's what I'm waiting on now, is that clear break above. And then if we see a break of the structure here, then there's a very good chance that we fill this whole area and make our way to that TP1. All right. So even if we break above, can look for that retest and go. If we can't break above, then it's going to come back down. If we break this low, I have like, basically this is my mental stop loss, which is 170. I have a physical stop loss also because I'm not crazy, but the mental stop loss is after we break that level, that's where the idea that this trade is going to reverse starts to get weaker and weaker. I'll still wait for that correction so I can get out either in profits or in a minor loss. But yeah, once we break those lows, that's kind of where it's game over for this trade. Till then, patience pays. Now it's like watching grass grow. I'm going to play an excerpt of the recent podcast with Pierce in case you guys haven't gotten a chance to watch it. I highly recommend you guys check it out. But just in case you haven't, we'll play a small excerpt while we're waiting for this trade to finish playing out. Or we go back to one of the classics. What do you guys think? Put one if you guys want to hear an excerpt from the Pierce video, or put two if we should go back to one of the classic podcasts and just pull out some gems. Pull out some gems from the, from the vault. So one for the Pierce podcast, two for pull out gems from the vault. Because I'll be here to provide commentary on anything that's happening so we can kind of go through questions or anything else. Ooh, what's up, Daniel? Good to see you in the chat, brother. So VIP members are saying one. Chat's saying two, but VIP members take precedent. Let's see if we get some more votes in. Oof. Yeah, all the votes are coming in for the Pierce podcast. When NAS is consolidating, it usually becomes because it's waiting for US30 to reach the next zone. Any thoughts on this? No thoughts on that. NASDAQ isn't necessarily waiting for anything. They both have, like, the moves for the day are already predetermined. Okay. It's just a matter of if the market hasn't moved yet, it means they don't have enough liquidity. They don't have enough people on the other side of the trade in order to execute just yet. And so the consolidation is basically just an accumulation of orders and liquidity to be able to push the market in the opposite direction. If the market wants to put in a giant sell order here, they have to wait until there's enough buy positions loaded up so they can make their move. If the market's going to buy from here, they have to consolidate long enough for sellers to step in and to load up sell orders so that they can execute their buy positions. Because you can't buy a big amount of anything if there aren't sellers on the other side. So the consolidation is really just and that's what makes it so stressful for traders. Is because you really don't know what's going to happen next in a consolidation, and so people will panic before the market makes its move. If I'm going to be wrong, I'd rather the market let me know I'm wrong and the market prove me wrong rather than me be in my own head and convince myself that I'm wrong and get out of a great trade opportunity. You understand? So that's why consolidations are stressful. It's a test of your patience, a test of your discipline, and really it's just a test of your knowledge. Because if you know the strategy and you know the edge and you know your performance metrics, then like I know that if I lose this trade, it's going to be inconsequential to my account and inconsequential to my overall P&L. Small loss. And so because of that, it's like because of that knowledge, that's what gives me the confidence to be like to wait it out as opposed to needing to be right, in which case every time it goes in my direction, against my direction, might start to feel the need to close it just to get out of danger. You guys understand that concept? So really having a plan, making sure that your trade is already kind of set up in advance, and just doing the necessary work like backtesting so that you have confidence in your strategy. So even in times of consolidation or drawdown, instead of panicking, you're more confident, you can load up more orders, and you can have just that real confidence. All right, so it's a waiting game. I see most of the votes came in the VIP chat for the Pierce podcast. So we'll pull that out, and then we'll go through some of the key things that he said.
So it's quite interesting. So we went to FX Summit last year and the year before. It's very, very
Can you guys confirm you can hear the audio?
In vogue right now, and as a result, you see somebody like a Reddit going public, and being up 70% in the first day of trading, and then like another 60% in the second day of trading. It just goes to show there's a lot of appetite for this stuff, both on the institutional side, but
can we hear the audio? We good? All right, thanks, Bruce.
It's perfect
on the retail side as well.
Well, first, I think Reddit's lucky because they have a huge support network. They have an arm. The stock is a meme, so I think that's a very fortunate position to be
built in. Totally.
You mentioned regulation, which I think is the topic of the day. How have you seen regulation changed, and how does that impact your business or trading view?
Yeah, so it's quite interesting. So obviously we went to FX Summit last year and the year before, and
plug.
Tried to bring some voice of reason, I think, for sure.
I know y'all heard that slight plug.
So we talked a lot about how there are firms out there that are overnight success stories, but you really...
All right, last time I'll do one of these interruptions, unless I have something useful to add. But his talk from the summit is also on our channel. If you guys want to check it out, you can just type in TradingView FX Summit, and you can hear his talk. He basically just got on stage and ripped all the offshore brokers and everybody to shreds, and then walked off with a smile on his face. He said he was trying to provide a voice of reason, and I think it worked because the industry got very, very, very hot after, and then we had the burst of the bubble. And so I think that it was a very necessary voice, and it was a very necessary talk at the right time that got everyone to start thinking about offshore brokers and everything else. That way, when the MetaQuote situation happened and they, basically broker after broker started going, basically banning US clients and getting kicked off of MetaQuotes, et cetera, that prepared everybody. And then it kind of prepared everyone for the prop firm wave to make everyone adaptable. Everyone moved over to futures pretty quick. So I think his talk was probably the most timely thing in the world.
Really dig into, what do they do and how they
almost like he knew something. Also, this NASDAQ trade looks like it's going to break bearish. And so I'm keeping an eye on it. I will close premature if it breaks that mental stop loss zone I talked about earlier. So keep that in mind. We'll be monitoring it as time goes on.
They've grown so fast, and oftentimes there's a lot of well, cutting corners, if you will. Yeah, question marks. And so we most recently saw this in what's called funded trading programs, and a lot of these challenges, if you will, where people come to the forefront. They basically say, hey, we will, take $100 from you, but then we'll allow you to enter these challenges. Potentially you'll make a bunch of money, potentially you won't, but the downside is, $100. So it's a good trade for an individual investor, right? Their downside's pretty limited, but their upside is essentially, well, maybe I could, start managing money or things like this. So this has been really popular in the future space here in the US, and then internationally, FX and CFDs have taken this very, very seriously. As you say, the turning point really has been around people starting to crack down a little more as to how these companies are funded, ultimately who owns the accounts, and there's a lot of people kind of growing up in the middle of the market, which is not so much the retail customer or.
So we're actually going to get to that part right here where I ask him what he needs to see in order to work with a prop firm. And then we even talked about it off camera about what we would need to do if we launched a prop firm to get listed on TradingView. And a lot of it just has to do with the relationship of which broker is providing us the liquidity, which brokers are we partnered with, and are they above board? If we meet a lot of those criteria, then we can get listed on TradingView. And that's something that I'm really, we're really pressing hard on.
For the brokerage, but a lot of kind of service providers in the middle. And as a result, nobody's really kind of dug into that too aggressively until I think it was November of last year, which was like the Funded Next or something like that. There's a couple big firms that had, very.
It wasn't Funded Next. I don't know why I had to throw them under the bus like that. Funded Next. Sorry, guys. Though I actually like that team. I think that they're doing good work, but everybody had issues at the same time. I think he was talking about MFF, which had the Canadian authorities and the CFTC both simultaneously coming for their neck.
Very substantial brands kind of grew up overnight, and we saw some takedown actions as well as, yes, I think enforcements across the board. So that does signal, I think, to me that there will be more eyes on the space for sure, because these businesses have grown so fast.
Yes. I'm entering another small position, by the way, just a smaller one. So it's going to be another quarter position. Let me give you guys the visual here. I'm going to enter the parameters on my phone. Same deal. I'm still monitoring this in real time. So if there is an issue with this thing breaking the lows, I'll still be looking to close at the mental stop loss. But for now, I'm seeing higher lows getting formed, even though we didn't have a decisive closure above this high, which I would really have liked to see. I do like this double bottom. Kind of we're on the smaller time frames here for execution, but I do like this double bottom that's forming. It's kind of forming a higher low support. So I think we can at least get that TP1 before the market breaks down. And that's kind of what I'm betting on now. All right, let me make sure my stop loss is set. Here. All right, get back to the podcast as this thing plays out. If you did enter this trade, just shout out your entry in the chat real quick, just so we can kind of have an idea of where everyone's at.
But at the same time, honestly, creating competitions in simple terms, there's nothing absolutely wrong with it whatsoever. Mm-hmm. It just comes down to who are the players that are involved in actually, say, making markets behind the scenes, actually holding the accounts, right? Nobody really dug into that initially, and then turns out oftentimes you were wiring money offshore, and then that was supposed to be like actually kind of a normal thing.
So we've already heard this part on the live streams. I played this the other day.
Of the risk paying off at the end of the day. It's
right.
Too much risk. TradingView is a big business, but not more regulation wired crypto. And it's all okay. Well, I'm pretty some kind of sketchy brokers. I'm like that. So it's.
He was ripping into the sketchy brokers, wiring money offshore, paying, funding your account with crypto, how sketchy all of this is and how normal we made it. God.
It's great for the business on our side. We obviously are restricted from working with a lot of these kind of prop trading firms and things like that. And so obviously people come to us every day and want to work with us, but we have to obviously draw a pretty clear line there for sure, because
Of course.
as you can imagine, it's, again, asymmetric downside. There's a lot of brokers, there's a lot of folks like us that really don't don't see kind of the risk paying off at the end of the day. It's
Right.
too much risk. TradingView is a big business to deal with these kind of firms. Sure, there may be short-term money available, right?
For sure.
But at what cost,
Yeah.
basically? So,
And I think that's the beauty of building something so big like TradingView, is that you're not going to be picking up pennies in the sand. You're not going to be chasing pennies in the sand and giving up the real opportunity, which is building the largest platform and an integrator. Now, one thing that I love about TradingView is the vetting that you guys do for the platforms you allow to partner with you.
Yeah.
And you spoke about this at the summit, but could you give a quick rundown of
Sure.
if you were to
So this is the question: is that if you were to partner with a prop firm, what would you have to see?
partner with a prop firm, what would you have to see?
Yeah, well, so across the board, we prop firms in general, we can't partner with them from a integration perspective. So
Yet.
it's a simple kind of
Yet.
unfortunate reality. We do still have the ability to license them some of our technology. So if they want to build their own platforms, that's great. We have a ton of tools for them to do that, to plug those technologies in. What I think you're referencing in general is we have a very strict policy around basically KYC and AML for brokerages that we now integrate to tradingview.com.
Yeah.
This is something that basically when I joined, I emphasized that we needed to do, because TradingView has always been a front-end technology, and we do a ton of everything from market data to analytics to news to social. But when it comes to actual trading and investing, we realized, one, this isn't our expertise. Two, if we were to go that route and become a broker dealer ourselves or something like that, it would come at the burden of actually building out an entire compliance team. At the time when I joined, I mean, we were 70 people, right? I mean,
Yeah.
even though we're 700 people now, we still don't have the time to set aside another 100 people for compliance, operations, et cetera. And so, but if you think about it, the workflow of an average investor, they come to TradingView, they learn a little bit about the markets, they find an interesting thesis or idea that they really care about, they research it, they look at it in the chart, they look at the
Big thing is never celebrate too soon with NASDAQ. So let this thing ride out, be patient. It is moving pretty well right now, but until we have a decisive closure and then like a real push into the zone, then still could break down. Okay, so we have to have a decisive closure above this region here, which we still haven't gotten. And so a lower high, like even though you have this higher low, doesn't signify a shift, because if you can't break this high, then there's a potential for the market to still move to the downside. All right. So again, this is my kind of mental stop loss zone, is the 17,168 level. We break that, that's where I'll get out. And then to the upside, once we break this zone, we could see a potential retest, but TP1 is a lot more likely once we've kind of created a new bullish range here.
the fundamentals, they look at the news, and then it comes to a moment where they're ultimately going to want to invest. And in that moment, we usually have to pass them to another website, right? Like I have to go to fidelity.com to actually trade.
Right.
And so when I joined, I was basically like, guys, we need to actually integrate these brokers directly to us such that they don't go off-site and then we lose them as customers. Right?
Genius.
And so the whole workflow was to build like a walled garden, but then allow the brokers in such that we could basically complete that entire.
But so like the ability for you to trade directly, like Oanda and all these brokers here directly on TradingView, we can credit that to Pierce. Shout out to him for that, because they didn't really want to do integrations before, but he understood how big it was for their business and how big of an opportunity it was. And he's the one that pushed for it. So shout out to him. Also, yeah, now this trade is looking pretty good. Now we're looking pretty good. Steady.
entire life cycle on the platform.
Of course, that's so great, and I think that does take like a bit of an I want to say an innovative approach to see where the future is going, where partnership and integration versus trying to build a proprietary platform and slowing yourself down to compete in these individual markets where they have.
Sorry, drop a like if you're in profits. Drop a like if you're in profits. Drop a comment if you're in profits. Yeah, let's just see who's in
the edge because they're spending all day on it.
Oh man, totally.
So what really is the end goal for TradingView? Is it to be an integration platform for the brokers? Is it the social aspect? Is it the charting technology? Which one of these do you see as being the main driver for TradingView?
Well, I think it's interesting because a lot of brokers or a lot of like technology firms, everybody wants to do one thing really, really, really well. We've kind of adopted an approach now, which is we do one thing really well, but we multiply that across a bunch of different verticals. And so
the fuck does that sound?
In this case, we have to be the best at charting. That's what we do. That's what we're known for. But now we believe we have to be the best at things like market data, things like real-time analytics, alerting systems, execution.
Oh, wow.
All these verticals in one. And to be honest, I think that few people really think about it from like a comprehensive workflow perspective, kind of what I explained, like the individual steps that take place. And so from that workflow, we believe we need to be the best at all of those different pieces of the workflow. So
consolidating the process of finding a trade and putting it all in one platform so you don't have to keep bouncing around.
Correct. I think that and we do know what we're good at and we do know where we struggle. So actually quite interesting. We just killed live streaming. So we had live streaming as a product on TradingView.
This one hurt my feelings because what are we doing right now? We're live streaming on TradingView. And I didn't even know they had a live streaming platform. Could have been running it up. All right. We'll pause the interview with Pierce here. You guys can check that out. We'll play one more segment that I think is pretty important. But we got 17,330 on MNQ. Good stuff. Deep profits. Yeah, Josh, we in that. 17,353 on MNQ. 330. We have 349. Big Diverso in the chat. Shout out, put W Diverso in the chat. The glue, the chart addicts situation. I'm on Apex Futures NQ. Awesome. 17,200 and 17,224. Let's go. Live stream, folks. We got US30 at 37,750. Awesome stuff. If you're in profit, smash the like button. Gabe gets it. QQQ calls up 50%. Wow. Benjamin says, thank you, Roy, up $200. Good stuff. W Diverso all day and night for sure. For sure, for sure. All right. Not bad. Not bad, not bad. Could have got a better re-entry, if I'll be honest. Should have got the wicks. But can't cry over spilled milk.
For almost a year and a half.
But the benefit of being on a YouTube, for example, is the traffic.
You know, not disclosing anything proprietary, but the most important factor is customer feedback. A broker wants to work with us, and ultimately they say, okay, well, you have equities, you have crypto, you have futures. Where are the options? And
ain't nobody trading options, bro. I told them on the podcast, I was like, bro, ain't nobody trading options. Like, just dead that.
If you really think about the inception of
very, very nice intuitive design.
And if you're gonna trade options, just go to TD Ameritrade, go to Robinhood or something. All right, futures is the way to go because it's higher leverage and kind of more our style. But I mean, I don't know. Options to me is just more of a, if you're doing large bets, you can they're kind of like an insurance policy. Because you can do some pretty interesting things with options. Like you can do kind of put and call spreads and callers and different strategies to sort of hedge your risk. But for me, CFDs is top dog, number one, hands down. But it just costs the banks too much money. And then futures is second best, but lower leverage. And so,
that is overly obsessed and perfectionist, but takes action.
Don't pay 6 figures to 7 figures for charts. It's just not in their product, but soft, for less than a penny. And all of a sudden, it's hockey stick growth. Or low cost trading combines or low cost, but also having infrastructure that is actually reflective of, but that new generation of investors who want to have these kind of combines or competitions or things like this.
That's
that
relevant.
Takes a long time for a broker who's a very regulated entity to make a move or a shift in that direction. But safe to say, now that they do realize the size of that business, it is for sure coming. On the retail side of things.
So this is where he talks about Oanda, IC Markets, and the largest brokerages in the world. They will enter the prop firm space, because at the beginning he said that they don't touch, no one wants to touch it. It's a shady business, all this stuff. But it's very clear that everyone understands how big of a business it is and how much money there was. And that's why they're all going to enter the space. And I want to let you guys know that as much hate as the current kind of the pioneers of the prop firm space are getting right now because of all the problems they're having, the first round always has to deal with the bullshit. Look at crypto. Like, all the first rounds of companies, obviously there's tons of scams, but there's also tons of good companies that just, they got caught up in the crash. And don't think that the big brokers aren't playing a shady game as well, implementing spreads and different costs and fees into the price quotes to make sure that they're always having an edge over traders and things. All these different tactics, using the terms and conditions to deny payouts, all these things are still going to happen, not at the same scale that's happening in the sketchy kind of world that we live in. But yeah, like, we got to give a shout out to the pioneers for taking the risk. Obviously, they made big money from it, so it was, there was something in it for them. But they did give a lot of opportunity to a lot of us, right? A lot of us have made our big breaks through prop trading, and even though they're getting a ton of shit right now, they are the trailblazers.
I do agree with you that the bigger guys.
Oh, TP1 hit, secure partial profits. I'm gonna protect the trade, moving my stops to break even. Let me go ahead and do this here first, and then let me adjust it on my phone real quick. Very likely that the market will come back and hit the entry before heading to TP2. So if you would prefer to just secure partials and hold the rest, you can do that as well. But I'm going to protect the trade, because I'm just going to take money off the table and then enjoy the rest of my day. And by enjoy the rest of my day, I mean, I got to get my ass to work and don't want to have to worry about the trade running naked with no stops. All right, let me adjust this real quick.
Are not interested in providing maybe lower cost solutions. But that does actually present kind of a Robinhood opportunity, which is, if you think about it, like from a very, what would you call that? Like a low cost kind of prop solution, or low cost trading combines, or low cost, but also having infrastructure that is actually reflective of, like, traditional markets.
Yes.
Whether it be like a trade station or whether it be an Oanda, these guys have infrastructure.
That's not going to happen. I think we're going to have to pick between one or the other. If you want infrastructure like Oanda, Forex.com, or Saxo, or Black Bull, or any of those, it's going to come with a higher cost. Challenges will cost more on those platforms. Now, he's saying that there could be competitors that come out with a low-cost solution. So imagine for futures challenges, it's $50 a month, or the challenge is free, but it's a 3-step kind of deal, and then you pay for the last step. They're going to find some way to make it more expensive, because they have the regulatory overhead, meaning they have to pay for all the licensing and registration, but they also have to pay for an entire department of risk management and HR and everything else to make sure that they're complying with all the laws and regulation. And that's what costs money, because hiring a bunch of lawyers is expensive. So he's saying that there's going to be both. Whoever cracks that code, they're going to be the biggest winner. They're going to be like basically like the Charles Schwab or the Fidelity.
Now, if somebody came in and really thought about it from, kind of a Robinhood mentality, that's a big change.
Wait, we got to see the chats here. I'm sorry, guys. I keep jumping in and out, but lower entry was $700 risk. I was at over $1,000. Good stuff. Took partials. Awesome. Congrats to everyone who caught it. Yep. I closed the full position. Want to end the week on a positive. Great work. The trade just paid me $1,300. There we go. That's what I'm talking about. Done for the week. Hit my target for the day. Good job, Christine. Awesome stuff. W chart addicts for life. Gabe, you're the man. All right, let's see here. Best entry 1700. Alfonso, Benji, everyone's throwing W's for Diverso. From this week, I'm up almost 2%. All right, who made money today? Throw it up in the comment section if you made money. If you didn't make money, just let me know if you learned something. Just let me know if you learned something at least. Throw it up in the chats because we're going to end the stream here. But congratulations, everybody. Great day so far. Market could very likely come back for a double bottom or a little bit lower. So think that 165. So if you don't want to move your stop loss to break even, you can move your stop up to about 150. All right, depending on your broker, if they have a history of doing shady things near your stop loss, where spreads widen more than they're supposed to, then you want to give it a bit more room. But you should be all right with 15 points below that 170 zone. Okay, so it come down to 170 and then shoot all the way back up to TP2. If this thing is really bullish, like really, really bullish, we're going to hit TP3. We'll see a break above this high. And then we could see either a retest of the entry zone or that 170 level before we continue. Markets do not move in a straight line, people. That's why we secure partial profits. So if it's really bullish, we're going to see a very, very extended sequence, okay, which has probably a more aggressive retest. And then if it's just like a TP2 kind of situation, we're going to play around here, come back, and then make that move. Make sense? All right. Up a couple thousand this week, all good. Always gems and sharpening the spear. Love to see it. Oh, I got you. But I don't trade and drive, man. Don't worry about that. Oh, see, Christine already got it. Christine, bro, that's what I'm talking about. You gotta look out for these. Some people are just, what are you even talking about, bro? You're driving. I made money and I learned double reward. That's what I'm talking about, Gabe. Let's check the live stream chat. 7-figure mission through the super chat. W 7-figure mission. Good looks. $1,000 dub. Vincente, good stuff. Cheers. TP1, awesome, awesome. Rich made money. $1,800 to Temka. Good stuff. Alfonso made money. I was options buys this morning. Came to the stream to vibe out. Sending appreciations. I appreciate you, brother. Thank you so much. Thanks for the free money, Juan. You're welcome. De nada. All right, let's run it up, everybody. Take it easy. Happy and safe trading. Oh, this thing is still going. This thing is still going. What a rejection. Talk about accuracy. Talk about just being accurate. Yo, is it too early? Yo, chart addicts member, is it egotistical if I pull out the receipts already? If I go back, if I go to the recording of the stream and I find the receipts in real time, instead of waiting for tomorrow's stream, we do it in real time. Is that kind of crazy? Is that ego? Might be a little bit. All right, let's go back in time. Let's go back in time to before this, a time long, long ago. Alfonso threw $30. Alfonso. Sheesh. Everyone say W Alfonso in the chat. Good looks, brother. Okay, so here's what we're going to do. Let's go back in time. All right, let's tell a beautiful story. About 45 minutes ago. Or probably an hour ago. And let's jump to today. Let's fast forward. Sell off? Buys? What was that buy zone? 150? We came close. Ended up having to readjust it. Hold on. Let's fast forward a little bit more. There we go. Nice. Good stuff. Christine said, don't hurt him. Wait till tomorrow. No, they had to know. This is Inception. I'm reviewing the trade on the stream, reviewing the stream while we're on the stream still streaming. This is Streamception with the perfect entry. Come on. All right. Let's do some final reminders. Live class, May 1st. You have 5 days left to register. Do not miss out on this live class. It's a 4-day online workshop hosted by yours truly, that's me. And we're going through this exact strategy, how we catch these trades, how to find entries, exits, how to find your take profits and set zones, how to set your take profits and set zones, how to set up a good risk strategy, and how to set up a good execution strategy so that you protect your downside and you can maximize your upside, which is obviously the whole goal of trading. So if you're interested in having something that's working for you, having a strategy that's consistent, that you can depend on, that is very simple and just sort of repeatable, this is the class for you. Only class you'll ever need. May 1st. Check it out in the link in the description. That's today's stream, people. Drop a like and subscribe if you haven't already. Catch you later. Take it easy. Peace. And shout out to you, Alfonso. We'll do something special tomorrow. Probably get you in the next class, or we'll get you on something, Alfonso. All right, y'all. Peace. Look at the accuracy of TP1. Look at the accuracy of TP. It's just too much accuracy. I'll try to get in on the retest. You could do that for sure. Just do not buy anywhere up here. The buys are down here. All right. Don't be a baby pips trader. All right. It's not a live stream if I don't throw a couple of digs at baby pips, right? All right, y'all. Peace.